Talking about current trends and divestment and unburnable carbon, I guess for me was really typified this morning when I opened up my Twitter account as I'm sitting at the airport to come up here, and in the first 10 feeds, at least half of them were about the amount of capital and investment flowing into low carbon infrastructure to clean energy. They were talking about the largest offshore wind farm in Europe being approved and financed by Deutsche Bank. They were talking about projections that solar could become the largest source of energy generation by 2025 in the world. They were talking about Denmark setting up a green investment bank similar to the Clean Energy Finance Corporation. And you look at Australia and the news is similar. You see a hell of a lot of capital flowing into low carbon investments and infrastructure and clean energy. You've got the Clean Energy Finance Corporation here that's invested about 700 million in the last 12, 14 months, co-investing with private investors across energy efficiency, across all kinds of technologies. It's really quite exciting stuff going on. You've seen in the last week alone where in South Australia, I think we saw about 70% of the energy was being generated by wind for 6 days last week. And why am I talking about this? I guess this is really typifies the move and the trend that's occurring right now, and that is a trend towards a cleaner energy system and a trend away from the old fossil fuel paradigm towards an energy system that's going to look very, very different in the next 5 years, 10 years, 20 years, certainly at least by then, probably sooner because it's all happening a lot faster than anyone had ever really expected. It's starting from a low base, but it's becoming a bit of an avalanche. And this is really one of the major factors that underpins climate risk as we talk about it in the investment world. That is coupled with the idea of unburnable carbon on the flip side, which is the regulatory risk that ultimately when we look at the companies and countries out there globally that produce fossil fuels, on their balance sheets they're holding about 3 times the amount of fossil fuels that we can possibly burn if we're to go anywhere near maintaining global temperatures at 2 degrees. The hypothesis there is that therefore these fossil fuel companies are overvalued because they're assuming they're going to burn everything that they have on their balance sheet. These are 2 elements of climate risk, of unburnable carbon, of which one of the key tools that's being talked about at the moment in terms of responding to this is divestment of fossil fuels. And we've certainly seen a massive shift in that area in the last, month alone, let alone the last 12 months. In the last month, we've seen announcements from AMP Capital, we've seen announcements from UniSuper, from Uniting Church, from Bendigo Bank. This comes on top of a number of other funds who already had divested of fossil fuels. So we're starting to see a bit of a wave occurring, and divestment is an investment option for funds out there, so we're starting to see that shift. It's on the margins and it's of a small scale, but no doubt it's created enough of a wave that we now have, probably testament to its momentum is that the Minerals Council is out there now targeting directly responsible investors who are divesting fossil fuels with their old campaign tricks, producing the independent economic analysis that ultimately concludes that it may be illegal to run a divestment campaign. False. That it may be that responsible investors actually don't care about your financial returns if they're divesting of fossil fuels. False again. But it's interesting to see that response, and probably each of you coming here tonight, you'll probably all get an email from Australians for Coal tomorrow about why you should be supporting the coal industry in this country. But nonetheless, there's a lot of fundamentals that are really challenging the fossil fuel industry. Whether it's your passion for climate change and your ethical position that you don't want to be supporting your investments in fossil fuel companies, or whether actually you're just looking at the economic fundamentals underpinning thermal coal industry, the demand forecast from China, the shifts in the electricity production. There are a lot of reasons to be concerned about potential for stranded assets, potential for around unburnable carbon and climate risk. So divestment's, hot right now, I guess. But what I want to sort of tell you as well is that among a lot of the big institutional investors in Australia, and my membership spans the big guys down to the small boutique guys, the ethical guys to the mainstream guys, and so there's a broader range of approaches that'll be taken to manage climate risk. I guess we'll start by the premise of saying that within our membership and pleasingly within a lot of the investment community, the debate in climate change isn't occurring, it's just understood. In fact, the investment community has been one of the strongest advocates for carbon pricing policies, etc., clean energy finance corporations, etc. So, you know, that debate's not being had there, which is pleasing and quite unique in Australia in a context where most business lobbies are looking at short-term, narrow vested interests and are really not, are still at first base there. But within the big institutional investors, those holding, you know, tens of billions of dollars, you know, about 30% of that's generally invested across the ASX 300. And if you look at all the fossil fuel exposure in companies in the ASX 300, you know, we're highly exposed. We have very few direct, you know, pure play coal producers, but we've got a lot of diversified miners. We've got a lot of infrastructure providers to mining services. We've got a lot of the mining services companies. You know, depending how you assess it and how you break it down, it's anywhere between 14% to 30% to, well, you know, if you don't believe your bank should be financing fossil fuel, you're getting up to closer to 35, 40, 45% of the ASX 300 in terms of market cap. So for a large investor with tens of billions of dollars, it's hard to exclude fossil fuels. And so there's a number of other options available to them. And I guess what we're starting to see is more momentum within the institutional investment community towards pushing these other options. So we're seeing investment flowing to low carbon infrastructure, to clean energy. Recently there was a World Bank green bond issued in Australia, about $400 million. The first one issued in Aussie dollars. It was highly subscribed. Cornerstone investor was UniSuper, AMP, Aussie Ethical, local government super, a whole lot of Australian investors that put their money into a green bond, which is great because that money then goes to investing in climate change mitigation and adaptation projects in developing countries. It's a really important mechanism for getting the large institutional capital flowing into clean energy, which has in itself got some challenges. We then see there's sort of more technical responses. We see low carbon indexes being developed. We see carbon tilting, carbon hedging, people trying to ensure their index portfolio has a lower carbon emissions intensity, all kinds of technical responses. But the one you most often hear from the institutional investors is talking, engagement, trying to flex some of the muscle of ownership of these stocks and trying to influence companies through their ownership. And I guess that's something where I think there's a lot of opportunity in Australia in terms of using the investment community, the long-term investors within that investment community who truly are looking at climate risk and worrying about that, and using that to influence corporations and particularly with the big diversified miners, where are their capex budgets heading towards? Are they developing new greenfield thermal coal, or are they developing other more environmentally sound minerals and metals, etc.? Perversely in this whole divestment debate is that actually you might actually want to own some of these companies if you want to influence them. So you can sort of, there are some strange perverse outcomes in divestment, is that if you own a company, then you're generally going to have access to that company and the potential to influence it. Now, I'm not going to say that the big institutional investors are actually, you know, really starting to shift things materially in Australia, and I think we're still at a position where these investors are largely very much aware of these risks, and what we're trying to do is really shift them from that awareness into action to try to use them to be able to flex that muscle, to be able to actually influence these companies to try to understand and mitigate and work towards avoiding the worst of climate change and actually take up some of the opportunities posed by a lower carbon future. I guess I'm not going to go too much further than that. But I do just want to say that, you know, that sort of exemplifies there's no real silver bullet in this divestment debate. You know, by divesting, you can potentially lose the power to influence. But by divesting, you're probably going to be taking your money out of the companies who are also, as well as doing fossil fuels, are also the biggest investors in renewables in this country. So by divesting, you've got some challenges. But also, I think what's really pleasing to me is that across that spectrum of our members and responsible investments or ethical investments in Australia, you've got a whole lot of options out there for the general public, like you guys who have turned up tonight, who are probably, you know, interested in ensuring that your money is invested in alignment with your own values. And so what I'd like to say to you guys is that divestment's about each of us as well, because you have the right to divest, to choose, to engage, to switch your money, to speak to your super fund and to ask them, where are they investing it? Are they investing it in the way that you'd like to see it invested? Building the kind of future that you guys want. And then if they're not doing that, you've got a right to move. You've got a right to move your money. And I'll tell you what, the investment community out there are watching this, they're listening, they're hearing, and they're seeing all the signs. And hence you're seeing the movement in the last month. So I'd encourage so many of us here and beyond this group to actually go and make those decisions with your own banking and your own super, because unfortunately in Australia we still have a very low retail demand for ethical options, sustainable options, responsible options, and we haven't quite joined the dots between our consumption decisions in the supermarket to our consumption decisions in our superannuation and our banking. So it's really encourage all of you to go and make that decision yourselves. Thanks.